For now, it is, for sure, I think.
For now? I mean, until next week or what?
No, not until late February. The next refinery maintenance season, when they start to when they retool for the gasoline season, just like we went through recently where they retooled to make the winter fuel slate.
Right.
That causes a backup of crude oil in the system, and you see some substantial bills and inventories. So I think we won't be able to challenge these lows that we just saw until then. And maybe even not then. By then, we'll have a better sense of what U.S. production is looking like, if it's on a downtrend or not finally. But the selling on Friday looked pretty exhausted. But when I was here with you guys yesterday, I was almost ready to say that Friday looked like it. But that last whoosh we got yesterday really had the look of some capitulation. Yeah. I will say I would have wished yesterday had a higher high than Friday, because then we would have had a full-on outside day, as it's called, and that would have been a key reversal for technicians. So we didn't quite get that. But I think the exhaustive selling yesterday really, I think, put an exclamation mark on the sell-off.
It's a go. I think CPI confirmed that we are seeing, at a minimum, some leveling off in terms of headline and core inflation, but perhaps some very small signs that inflation pressures just could start to be turning higher. If you look at one of the aggregates that we like to focus on, core CPI ex shelter, you had a very slight pickup to 1.2% from 1%. It's still subdued, but it seems like maybe we're starting to head in a higher direction. You're right, it is unusual, but they have sounded a lot more dovish. They've expressed caution, so it's a possibility. It's not our baseline view. Our baseline view is that we won't see dissents, that the committee can come together and find appropriate language that satisfies both the dovish members and the more hawkish members. So we don't think there'll be a dissent, but you're right, those are two candidates that are certainly possibilities.
We think that the Fed's going to raise by 25 basis points. It could be lathered in terms of dovish speak. Lathered.
Really? Just sloppy lather.
Just sloppy lather. Just lots of frosting.
Yeah.
Lots of dovish frosting. They raise, super dovish, market rallies. Remember, we're still at 2250 for year end. That's a big move from here. We're going to close at 2250. I think we're going to get closer than most people think.
Really?
And then we're going to start believing in Goldilocks the first part of the year, market rallies, redistribution of assets into equities. And then we have a bit of a sell-off because of rhetoric that's going to be changing, because growth is going to be better than everybody expects. When we travel around the world and talk about our year ahead piece for 2016, 99 out of 100 portfolio managers believe we're heading into an industrial recession. Right. Nobody believes that the U.S. economy is coming back. And one of the things you talked about with respect to $35 oil, we've had lower oil prices for a year now. We're starting to see the behavior change. It usually takes 4 quarters for the consumer in the manufacturing sector to actually take that lower oil and gas and do something with it. So we do believe that fourth quarter earnings and first quarter earnings will be stronger than everybody thinks, and GDP will also be stronger as well.